Aashiesh Agarwaal, Vice President Wholesale Capital Markets with Edelweiss Financial Services, joins us with a quick take on what should one expect from Tata Motors today. Aashiesh, the street is betting on a strong margin expansion and a big surprise from JLR. Do you think the street is in for a shock or a positive surprise once again?
So on JLR, we have built in a margin of 16.7%, which is slightly larger than the margin that we had in the previous quarter, same year, at 16.4%. And if the company does manage to report margins substantially higher than this, then obviously it will send the investors looking out for more on the stock.
Aashiesh, Tata Motors, even after the recent run-up, is trading at a P multiple of about 8-9 times based on next year estimates. So irrespective of today's numbers, do you think somewhere attractive valuations will make Tata Motors an attractive stock for the medium term?
See, the way we look at this company is on an EV/EBITDA basis. So we look at the EBITDA for the standalone enterprise and the EBITDA for the JLR. And from that we make that adjustments for debt and other investments. So on that basis, if you see, the stock is trading around 370, 380 levels, while our last reported numbers are about 366. But we perceive upside risk to the same, given the strong performance on the volumes that they have reported so far. And if the margins are stronger, then obviously we will be looking at revising our numbers over there. So for investors, we think that the volume momentum from JLR continues to be very strong. The all-wheel drive variants of XF and the lower engine variants are doing well. The Range Rover Sport is expected to be another significant volume driver, and China volumes, which is a key driver for their profitability, continues to do very well. So all in all, the earnings momentum continue to be strong for Tata Motors, and we would recommend investors to keep looking at this stock from a positive basis.
Give us numbers, Aashiesh. What is it that you're expecting from JLR margins, and how do you think new models like Range Rover Sport could actually benefit?
So we are estimating 16.7% EBITDA margin for the company for the quarter from JLR. The company doesn't give margins on a product-wise basis, but typically Range Rover Sport margins are expected to be better, and China volumes also continue to do well, where margins are supposed to be higher. So while the company doesn't give region-wise or model-wise margins, but there we expect margins to be strong, and higher contributions of volumes coming in from these segments and these geographies should be positive for margins on an overall basis.
They do declare the margins for their domestic business. Now, domestic business is going through a cyclical downturn, but in last 2 quarters they have exhibited some cost efficiencies there. This time around, are we in for a surprise from the domestic business, and what is your take on domestic margins for Tata Motors?
See, if you look at the domestic business, the CV business, the volumes that they have reported in the second quarter of this financial year is at almost like a 3 to 4 year lowest volume that we've seen in any quarter from Tata Motors. On the passenger vehicle side, the quarterly volume of September 13 quarter is at the lowest that we've seen in the last 10 years. And we know from the other companies that have reported on the CV space, so the margins continue to remain under pressure. So we don't expect a very high margin. We think that EBITDA margins will be more like 1.5% for the standalone business in this quarter. So, and obviously, given the depreciation in interest, we think the standalone business can report a loss of about 670 crores for the quarter.
Aashiesh, good chatting with you, and hope to chat with you as soon as the numbers come out as well to analyze them. That's the expectation from Tata Motors, running in strong into its earnings, up by about almost 1.5%. The market, though, a little soft, 61.